Guys, I'm super excited to be with you guys today, and we have a special guest that's going to introduce himself. He has done a lot of great things in the capital markets, is now fully into crypto. So let me talk about yourself. Introduce yourself, please.
Thanks a lot. So my name is David Duong. I am the head of institutional research at Coinbase. I previously spent about 17 years doing a lot of macro work. Primarily, I was focused on emerging markets. So that's a lot of what brought me into the crypto side, understanding that a lot of these countries I was working with needed a store of value. So that was a big part of what convinced me to move over here. And I'm super excited to be talking with you today.
Great. Perfect. Now that you're saying it, it is very interesting to come from emerging markets to crypto, because crypto is a kind of emerging class towards investments. Was that for you like a very easy way to say like, okay, crypto makes a sense because now that emerging markets are like getting more into developed economy, the next emerging market is actually crypto?
Well, from a volatility sense, I think so.
Yeah.
You know, you're moving further along the risk curve.
Right.
In fact, I think that is what has gotten a lot of institutional adoption into the space because, you know, we roll back to the end of 2020, you know, credit spreads were super low. You know, they had already tightened to their equilibriums at that point. So I think a big space for this, given the fact that we were getting around like $12 trillion worth of global central bank liquidity, it was natural to move further along the curve to get that alpha.
Right.
You know, and I think that's a big part of what we saw in emerging markets like years ago.
Right.
Now, why I really like that kind of analogy is because I saw a lot of countries like Argentina, you know, being just shut out of global capital markets and needing access to it, you know, getting capital controls kind of imposed on them, inflation of around 50% kind of hurting their pocketbooks and just, you know, not being able to actually maintain wealth. Yep. And so I think this was, for me, became an obvious solution looking at crypto space.
Right. Completely. You know, I remember like 2016 and 17 when I was meeting some of Venezuela people that were in crypto. And they were saying that drastically their portfolio went from, you know, 10% of crypto to actually 100% of crypto because, well, you know, Venezuela is a very complicated market. You can't, besides, you know, real estate, there's pretty much the other things are extremely distressed assets, right? So
and you know, something we don't talk about with Venezuela is, you know, in order to spend your bolivars, you're measuring it by the pound. You're measuring it by weight because of how inflated their currency is.
Exactly.
Think about the simplicity of having crypto and being able to exchange, you know, your tokens that way.
Yeah, that's a good point. I don't know how much weight of crypto I have, but for sure that would be an interesting way. I mean, from maybe like now let's go back to that same angle from, you know, the emerging markets, you know, which actually was my thesis in 2007, so a long time ago. And I remember I was studying a lot the BRICS, and you know, you saw this everything saying Brazil is the next thing, Russia's the next thing, India's the next thing, China's the next thing, and it went from I love you to I hate you, and we've seen this multiple different times in crypto. Usually, what are the things that trigger the effect saying, okay, now we're at good moments, it's good moment to invest. This is probably overbought and probably we should, you know, get out of these markets. What are the usually things that you look at?
So for emerging markets, we spend a big focus on monetary policy, fiscal policy, but honestly, it's the unspoken things that really we tend to trade, and it's political.
Right.
You know, like a big part of what we liked about a lot of those stories were that they were growing. It seemed that there were regimes that were amenable to capital markets.
Right.
And when we started seeing shifts in terms of that outlook, I think that was what really started to hurt things.
Yeah.
And it's not necessarily about a political orientation in any way, shape, or form, but it's about whether those economies are actually allowing access to, you know, public ways of actually investing in there.
Yeah.
And when we start to see that those regimes start to shift, that becomes the problem. And that's, again, another factor in favor of crypto because it's not attributable to those centralized authorities that really can come in and it can be a force for good, but can also be a force for you know, creating challenges for the investor.
But which brings to now is what's happening today, right? Where we're seeing graphs that Bitcoin is replicating essentially Nasdaq 100 or at least most of the tech stocks.
That's right.
I have my own interpretation why this is happening, but what's yours?
I would say that, yes, we've definitely seen that the correlation between Bitcoin and, say, the S&P 500 or the NASDAQ has gone up from levels previously of 20, 30%, relatively uncorrelated, to levels right now of 80 to 90%. Right. And that has a lot to do with the stress that we are seeing and feeling in all risk assets. Yep. So things are converging to a beta of 1.
Yep, completely.
Now, a big part of that is what's going on inside the world, like Europe, China. We're seeing that Russia, for example, is blocking exports of energy to EU countries. We're seeing the lockdowns in China definitely making the potential of a global recession even more likely. And perhaps for the first time in a long time, we're talking about stagflation. Now, things are perhaps a little bit different in the United States. I think inside of the United States, things are looking a little bit better for the economy. Yep. Like labor markets look fairly strong. Corporate balance sheets are fairly decent. So is there enough in the U.S. that can offset those challenges we're seeing inside of the global economy? I would say probably not. And that's probably one of the big things that we have to see. And on top of that, we have a central bank, the Fed, who is very committed to fighting inflation. Yep. And it becomes less and less likely that we're probably going to see them trying to put on a Fed put. And I think over the last couple of weeks, that's what we've seen. We've seen that the market has been pricing out that idea. And now we're talking about quantitative tightening. So this has put things in disarray, more or less. And this has, of course, impacted crypto.
Right.
I don't think that crypto, from a secular perspective, is any weaker than where it was. In fact, I think the secular trend for adoption is still very steep. Right. But we are just facing cyclical challenges in a way that is affecting all markets.
Right. But I forgot if it was Paul Tudor or some other smart hedge fund guy was saying that in 2020, he was saying the best way to fight against inflation edge of the US dollar is to buy Bitcoin, right? Right. And I think so. That's when Bitcoin was maybe 15 to 20K, and then brought it to whatever 68K. Do you feel that these same people that at the end, where the crypto market now it's very much more institutionalized, it's much more driven by derivatives, and derivatives more like institutional type of product. Do you think that the hedge funds guys are going to see at one moment okay, let's play this thesis once over again, through 2-3 years later and do a déjà vu big bounce back on the market? Or you still think that at this stage people feel okay, let's wait and see between the war, between commodities going so high, the hikes of rates, and the global pandemic that could resurface at any stage?
There's a lot to unpack there. I would say first, the idea of the inflation hedge and the idea that Bitcoin can be compared to gold as a store of value. Right. Well, one, gold hasn't been the best store of value, but this goes back to kind of emerging markets in my mind, because for me, at least in Latin America, I can tell you that when people were facing a potential crisis or a challenge to their monetary regime, they would buy dollars. They don't go out and buy gold. Right. They need something they can spend. They need that liquidity. Yep. And I would say that that's not gold. It may or may not be Bitcoin. We don't know over the long term. Okay. But certainly, I would say Bitcoin doesn't operate as an inflation hedge in all regimes. Okay. Inflation is different in a risk-on versus a risk-off environment. Yep. And what we have seen is that, the evidence shows Bitcoin performs well as an inflation hedge in risk-on regimes. Yep. And when inflation is going higher in those types of environments, not necessarily ones that are risk off. And there are various reasons we can kind of get into why. But, I would say that's what people are missing when they're trying to make that comparison. So we are in a different world than the one that Paul Tudor Jones made that statement in. The current one that we exist in right now, I find it more challenging. Now, you're right that there are now derivatives, other products that institutionals kind of capitalize on, retail as well.
Right.
I think they are growing in influence, but I'd still say these are rather nascent markets that don't have the impact on the spot that people tend to believe it does.
Because if you remember, prior to 2020, like the people never talk about the Fed or the announcements, right? Where now it's like it's back to what I was, doing 5 years ago or 8 years ago, whatever. Which is like you're waiting for what the Fed, and then you go on, click buy or sell, pretty much.
Right.
Do you see that this is just gonna go, like markets are gonna go more and more aligned with the global economy, or you think at one turning point, for whatever catalyst, is that okay? Crypto is gonna go on its own side and its own thing.
It's interesting. So we actually did a machine learning model, and it's a decision tree analysis called random forest. I won't bore your listeners with what that encompasses, but essentially you're just trying to figure out what are the factors driving these things.
Right.
And what I found, even for some of the more mature digital assets like Bitcoin, like Ethereum, they tend to be very specific to those assets.
Right.
So they tend to be hash rates. They tend to be total value locked or like circulating supply. Definitely, I would have expected that for some of the newer tokens because if you're in the high growth stages, you're impacted more by those factors. But it's true for even something like Bitcoin. Right. So, of course, something like that machine learning model tries to distill everything into much cleaner kind of factor, so perhaps that's entangled with some of these other macro things. But what it does show me is that there are still diversifying properties to cryptocurrencies.
Of course. That's a great explanation, by the way. Thank you. I'm sure you guys are really enjoying this. Which brings us maybe to the second, like the black swans, right? You pretty much, you remember subprime, you remember different other ones of different bubble markets that exploded. There was the crypto winter as well, which is a slightly different model because we never really realized why did it come from. Maybe sell of too much ether from EOS, or just people got weirdly fed up of ICOs cashing out. Who knows what was it? But we never really understand at the end where it came from, which was maybe just greed and capitulation at the end. What are for you one of the big, let's say, drivers of potentially a black swan on the crypto market? Yeah.
Well, I think what a lot of people are looking at right now tends to be more like liquidity in, liquidity out. So a big part of what has gotten us here in crypto over the last 2 years has been the inflow of global central bank liquidity. I measured it at around like $12 trillion worth of liquidity. Crypto got around $1.5 trillion of that.
Oh, wow.
That's fairly significant.
That's big, yeah.
Right, because we started...
10%, over 10%, yeah.
Right, it was around 800 billion, if you remember, at the end of 2020. So all that growth to the 2 trillion, almost 3 trillion mark at one point before he came back down, that had a lot to do with it. Now, I think a lot of people, as a result, believe that if that liquidity starts flowing out of the market under a quantitative tightening regime, for example, that really starts to hurt us. Right. In some ways, that could be true, but we also have a lot more buffers than we had previously. Stable coins are one of them. There are now ways to actually store value in crypto and in the ecosystems, rather than taking them back out and putting it back into fiat and if you're concerned about something that's going to impact it. So there's a lot more utility in terms of people having actual use cases for crypto in a way that we didn't actually have in 2018.
No, that's very true.
And you see that developers are still building. Have you seen the growth in 2021? Electric Capital put out a good report on this. There are a massive increase in terms of developers working on Web 3.0 projects, for example. And they're insensitive in some ways to, not always, but certainly they're insensitive to some of the downturns that we see in this market. So these are ways that we've seen this market being much more buffered than it was in the previous big crypto winter.
Very true. I remember, a lot of people always ask me, Cyrus, but why didn't you cash out the 52 million that you guys raised mainly in crypto in late 2017, early 2018? I was like, well, we only had USDT back then. And for some of those who remember, well, we still love what Tether is doing, we love what Bitfinex is doing, and we're great partners. But back then, it was pretty hard to say, okay, let's just put all our crypto into USDT. The volume was not as big, and there was some other risk inherent to that. From that, there was DAI that came in, so new type of decentralized stable coins that has been really growing. And recently, there's been one of the third biggest, I think so, after USDC and USDT is UST. So can you explain a bit to our viewers, what has Terra put into place and what's this decentralized stablecoin?
Yeah, I think Terra is a fascinating layer one, particularly since it made the Luna token native on its token symbiotic with its stablecoin. So the health of Luna depends on the health of UST.
Yep.
And so you burn one, you mint the other, and vice versa.
Yep.
And you're seeing this model being replicated on Near, on Tron, and they have different approaches. Near obviously is slightly different because they have an EVM as a smart contract, and you have the Nightshade sharding, and Tron is trying to capitalize on higher yields, up to
USDD,
30%,
right?
With USDD, exactly. But more or less, they're still following the same playbook of trying to grab liquidity, in part because they understand how important the stablecoin liquidity is to the health of their networks. If they can get it, and they can, I think in some ways we're still operating under that idea that it's winner take all, and I don't quite think that's right.
I think that we'll neither.
I think we'll find ways that things are going to be differentiated. And it's just who I am. I never believe that you can actually capture everything, can take everything. But I do think that it's an interesting experiment. I think at the moment, because markets are unhealthy, we saw what we saw over the weekend with UST getting tested.
We have to wake up at 4 or 5 o'clock in the morning with weird messages.
Yes. And I don't believe this is something that we would have seen if things were operating in a stable way.
No, of course not.
But the markets are in disorder. The markets themselves are in disorder, and so people are testing things on that liquidity basis.
Right.
And so that's what impacts something like UST. Now, as a stress test, I actually don't think, granted, we saw a pretty sizable, drawdown.
Yep.
I don't think it performed necessarily that badly, but I'd still like to see what's going to happen over the long term. I think there's still the Lindy effect at play, that the longer this lasts, the more resilient it becomes. But until we know, we don't know. That's kind of unfortunately what happens.
Yeah, Anthony, our co-founder, he's been very, very stressed about listing UST, and obviously, our user is extremely interested about it because not only is it decentralized, stable coin, but more importantly as well, it gives a great, yield out of it. You get 18% on a daily basis. But with that is a very big risk, and people should always remind themselves that if you're getting, 5% or 8% with USDC, if you're getting 18% with UST, and if you're getting, let's say 30% with USDD, the better the yield is, the bigger the risk is, obviously, in every end. And that's something that a lot of people should always remind themselves is that, there's no free lunch, right? The bigger the return, the bigger the risk is. It is true that, UST people have tried to unpeg it, I think so, at least 8 or 10 times in the last, few months. It has been able to get back to its mean. It seems that some of these things are always orchestrated, though. And this is something that I like to share with you. So my brother-in-law yesterday, he said we were supposed to go climbing in the morning. And I told him, sorry, dude, we have some things we have to measure to see what was the decision about UST. So can't do climbing right now. We'll go climbing after. Then he told me, but Cyrus, what if you just shut down the app for trading hours during these trading hours of the weekend? I'm like, yeah, but the thing is decentralized at the end. If we close it, doesn't mean behind the thing is closed.
Right, the market's open.
Why is these Sundays always so bloody from your perspective?
I think in a lot of ways we see crypto being used as a proxy for risk assets that are closed. And, I think this speaks to several advocates for having other markets, equity markets, other things being open over the weekend. Because this is what happens within liquidity. And you hear now people looking at crypto and to to figure out what's going to happen to equity markets on Monday.
Oh, that's a very interesting one. I didn't know about that. Okay.
And we've seen already in the past that there have been issues with certain investors who perhaps need to divest, and they may do it on a weekend because that's the only way they can divest over a weekend.
Yep.
And so it creates these imbalances in the market.
Right. It is interesting to see that these stablecoin wars is still a lot to be helping. And so guys, as you know, we've been always big backers of Ethereum. Why? Because they've been one of the first guys to really revolutionize not only the whole crypto market itself, but the whole philosophy, how we organize through DEOs and how we could really bring it into Web3. But there's been many challenges to Ethereum, and therefore there's been a lot of different networks and blockchains. Is there any particular ones that you really like, and what's the reason for this?
Well, we at Coinbase remain fairly agnostic to tokens and layer ones, and we're not trying to pick winners where we are. It's kind of the nature of being an exchange. But I will say that I'm not convinced that we're going to see just one winner in the layer one race. Yeah. If anything, maybe we'll see some more specialization. Maybe we'll see that Avalanche becomes a layer one that caters more to gaming, for example. Yep. I think Solana has positioned itself rather well to actually take a lot of market place from on the NFT side. Yep. So, I think these are the things that we could see developing more. Maybe we see that some themes are very pertinent to people, whether it be security, whether it be the consensus mechanism. For example, if you might be concerned about MEV, you might say to yourself, well, maybe I want a proof of history consensus mechanism. It might be more valuable to me. Right. If you're transacting $10,000 versus $10, you have very different needs and very different concerns. Yeah. So, you might want to put your transaction on the settlement layer rather than putting it on a bridge or an L2 or something else. So I think these are the considerations we'll see more and more. But I do believe that we'll see composability across different networks.
And so if you had to score like a blockchain, this is a good blockchain, not to invest, just like how do you value a blockchain, let's say?
It's kind of tough because I don't think there's any one factor. It's really a composite of factors. Like if I said, oh, well, I favor decentralization, well, then the pullback to that would be like, well, then you don't like Solana. And I'm like, well, that's not true. Right. It's not that. But I do think that decentralization is important. Right. If it can offer you security as well, if you can have transactions that allow you, that are priced reasonably well for you to actually use the chain, because that's the end goal. Yeah. And we're seeing that for Ethereum, since you mentioned it, there are potential solutions from the L2 perspective, where you could start seeing that maybe there might be native on-ramps onto these L2s, and they can actually do transactions on there. Yep. And the post-Ethereum plan, like with the Shanghai fork, is maybe they'll have EIP 4488, for example, so that you can actually upload much more data onto the network and roll it back, so it'll be cheaper in order to actually run transactions on these L2s. Yep. But like I said earlier, you're going to see that people are going to need to make considerations. Right. Large transaction values, maybe I don't want to do it because I'm still very concerned about security. Right. So I think those are the things that we're going to see more here.
Yeah, like what I'd like to see usually is like how much applications are being built on it, right? And then see if there's traction on those underlying applications. Because I think so very often, there's a lot of blockchains, but some are not being used. Right. And if the technology is not being used, I mean, maybe not in the beginning, but after like 1 year, 2 years, you're probably like, okay, well, maybe it's still high in the market cap, but eventually, if there's no adoption of this technology, at the end, it's product, right? It will probably not go as well. But we've seen many times in crypto that this is not actually a real valuable scoring methodology. Right. Do you understand? Do you know why is that the case? There's many blockchains in the top 100 today that never have developed any applications. Right. And they've been here for quite a long time. Do you?
Yeah, I'm thinking of one in particular. I'm sure you are as well. But there are a few. And I would say that total value locked is a tricky concept. And it's one that's very helpful, but not necessarily one that should be the be-all, end-all
right.
of these things. Particularly since when we're talking about these things, new entrants come in a lot in this space because
yep.
we're in a very growth stage environment.
Of course.
And they're competing with each other. So you're getting, let's say, like 1 to 3% on a stable coin invested in a lending borrowing protocol
yep.
on Ethereum. Well, as we were kind of talking about Terra earlier, like probably the big migration we saw in total value locked over to Terra was because of that 19.55% that they initially
yep.
offered, for example.
Yep, exactly.
So that doesn't necessarily tell you that the value of this project
right.
isn't good. It's just that the incentive structures weren't there.
Right.
Or, it migrated.
Right.
So, the TVL doesn't tell you like the resilience of that project and how long it's going to last. Like
no, you never
that
know.
project needs to be examined by, the metrics of the protocol itself. How stable is it? How secure is it? Like the people involved in it, how passionate are they about the project? I mean, there's a lot that goes into it.
Yeah, we saw that with Phantom, for example. A few people leaving the Phantom protocol, and therefore, TVL just...
Exactly.
I think it's divided in two within the same week. What I usually say as an image for all these different DeFi protocols is that sometimes it's a little bit like offering open bar party, and then when there's then it goes until midnight, right? Let's say
right.
from 6 to midnight it's free alcohol, and then at midnight it closes.
Right.
Who are the people that are still going to stay because they understand the club, they love the club, and there's no more free booze. And sometimes, unfortunately, then they move to the next bar, which is open again for the next 4 hours.
I might have to borrow that analogy at some point. That's a good one.
So now let's become optimistic. What are for you the big bull signals that could come into the market in the next X amount of months or years that will have this catalyst and will bring us back to all-time high that we're all waiting for?
I think it's hard to prognosticate too far. I definitely would expect that before crypto can really start to come back here, we'll need to see some change on the macro side. But
right.
I think there are some important top-down themes
yep.
in the second half of this year.
Yep.
What we've been seeing over the last couple of months has been more what I would phrase bottom-up themes,
right.
which are important, but they tend to be more extensions of what we had in the first half of last year. So basically the development of layer 1 protocols, for example, like a lot of these networks, kind of like the algorithmic stablecoin
yep.
L1 situation, for example,
right.
or the build out of Web 3.0, or these like NFT markets, and
yep.
and they've been up and down, and then we saw this other side kind
yep.
of mint and create all this anxiety and activity. Well, I think that probably in the second half of the year, I think we're going to see important themes from the top down, which is probably going to be ETH 2.0, the merge.
Course, yeah.
We don't really call it 2.0 anymore, but
yeah.
but that's still going to be a big theme, and it's been pushed back. But
yeah.
I think that for the people that care about this project, that doesn't necessarily, it still resonates.
Yeah.
And so we haven't seen the pushback on the price necessarily, not in a significant way.
Yeah.
So I think that's still going to be important. And we're probably going to see something happen with L2s, where I would expect that L2 tokens will be launched sometime in the second half of this year.
Yes.
And I think we're probably going to get more regulatory clarity because the timing works out with the executive order. A lot of those reports that the Treasury has to come out with in tandem with these other agencies, that's going to be September, October.
Okay.
So I think that's going to be potentially good for the space,
right.
because a lot of that was made without any preconceived outcomes.
Right.
It was really, you guys learn about this, come back, report back, and tell me what you think. And so I think that could be very positive for the fact that people want to learn about the space on Capitol Hill.
Yep, that's definitely true. I think that's definitely great timing, and maybe do you believe, because El Salvador was definitely a big push into the market, whereas Central African Republic was not a big thing. What's your do you see other countries coming in, you think, on bringing crypto as a legal tender, or at least Bitcoin as a legal tender, and maybe would that be a big manifesto of a bull market, or not necessarily?
I think El Salvador really resonated with people because it was the first.
True.
And, it doesn't mean that Central African Republic wasn't important.
Right.
But certainly, I think people are looking for the use case of crypto, and payments has, for a very long time, been one of them. I think that we are now diversifying to other projects as well.
Yep.
The fact that we're building the other 30 layers of Web 2.0 on Web 3.0, I think that's a big one. And that's been a lot more captivating for many investors, especially on the institutional side.
Yep.
Because I think the idea of digital property rights really makes sense.
Yep.
People understand, you're actually trying to allow people to get paid on their work.
Yep.
There's portability. I'm not stuck inside of an Android or inside of an Apple operating system. I can move my funds to any other blockchains when I will, and it's mine. That actually improves wealth creation. That is real wealth creation.
Yeah.
So, if we're talking about the mission-focused of statement of what crypto is in terms of financial inclusion, that's it right there.
Yep.
Whereas I think payments are still going to be an important part of this.
Part of it, yeah.
But I think it's just expanding very quickly.
Perfect. Anything else that I think we covered everything quite well, no? We're good.
I think we got 100% of all the crypto markets. There's nothing else to talk about. We're good.
This was really, really cool. Where can people follow you? Are you on Twitter, or there's any way people could check out what you're doing?
Yeah, I would actually encourage you to look at the Coinbase research portal.
Yep.
We can include the link here so that people can visit.
Awesome. Perfect. Thank you, guys, and looking forward to the next one. It'll be great.
Absolutely. Thank you.
Thank you.
No, thanks for having me.